Hello guys, and welcome back to the channel. Welcome back to Vertex Investing. Tans here, and I just want to say I hope that you're all keeping well, you're all keeping safe given the current pandemic wherever you are. And again, I just want to take a moment to appreciate everything that I want to appreciate everyone that's actually followed us, supported us, and messaged us as well, letting us know how you're getting on. These messages are incredible to read, and I just want to say thank you, and thank you for keeping these, giving us enough content to keep going, because I do run a little bit dry in terms of content, to be honest. Thank you for asking the questions, because sometimes without your questions I wouldn't really know what to cover, and what you guys are struggling with. But I want to provide as much free content as I can for you guys, because I don't feel like it's hard to start trading and it's hard to start learning. Courses are quite expensive, and for me, when I started, courses were incredibly expensive, and I bought so many and I couldn't even afford them. So I'm hoping that what I'm providing here on YouTube is more than enough to be sufficient. But of course, obviously, if you want to join our mentorship, feel free. You can join the trade membership and have access to our Discord. Or if you want to join the February bootcamp, spaces are still open. It's on February the 20... What is it? February 21st? I might have just made that up, Hold on a sec. February... Where is it? Yeah, February... I didn't even mark it down here. February 20th and 21st. That's when the boot camp is, and hopefully I'll see you guys there. But again, if you don't want to join the boot camp and you feel like you want to learn in your own time, you can learn via the course, via the trade membership, and of course have access to us, have access to me, and have access to the community. But I will stop trying to sell Vertex, because that's not the point of the video. The point of the video is to give you some educational content, I'll call it. Right, in this video, we're actually going to talk about can you over refine a trade? The answer is yes, you can. And where does the over refinement problem come from? It comes from the point of greed. Okay, sometimes, for example, if the risk to reward doesn't seem appealing, you're going to try to refine it to the point where you actually miss the trade, right? So how do you limit that? Now, the thing is, for me, if I have a 5 pip stop loss, that is fine. For me, 5 pips is my max, and anything above that I don't take. Okay, that helps me decide whether I'm taking the trade or not, and whether I'm going to use the open or not. For example, this OB here, if this open gave me a 5 pip stop loss, I would just use the open. Okay, if it didn't, then I'll use 50%, and then if that doesn't give me a 5 pip stop loss, I wouldn't take the trade. From that OB, I'll look to refine it. Right, simple as that. Now you have to find, don't be too greedy, okay? Because there's no need. You can get a solid risk to reward, right, from pretty much any sub 10 pip stop loss, right? So just bear that in mind. But let's look at this trade, for example. So Euro USD, let me go here. Okay, so we can see the clear order block in this situation, right? Because let me get the brush. So obviously we had a high, and then we had this impulse, right, which broke structure, so we created this low. We could have taken a trade off here, okay, but that caused the mitigation, and then we have another order block here. Okay, so we've got mitigation initiation. Now we're going to look for another mitigation here, right? Simple. Now all we have to do is mark out our order block. So our order block is this one. I'll make sure you remember the wick. There we go. And let me just, where is it? Oh, I've already, I marked it perfectly. Okay, so we got the order block. Now, if you use this order block, it would have given us what? A 12 pip stop loss. If you're happy, or 11 pip, I'll say 12. If you're happy with that, use that. If you're not, you're not. Because say, for example, in this situation, if you were to use that, if you were to use the open, you would get what? Okay, say 13. If you were to use the open, you'll get a 7 risk to reward, which is solid, right? If you weren't going to use the open, if you were going to use the 50% of that, I don't know why I got rid of the short tool. I probably shouldn't have, purely for the sake of convenience. But let me get that back. There we go. If you use that and you put your stop loss above, what's that? 7. We'll say 7 pips. Yeah, you can have had a 13R trade. If you're happy with that, use that. But for me, obviously not. But all you do is you're going to go down to this OB and you're going to refine it. You're going to go down and find what's the clearest one. That's not any better. Let's go 2 hour, nothing. 1 hour. Nah, it's been mitigated. Don't worry about that. Mitigated. Don't worry about that. Essentially, this is all you do. You just go through the time frames and try find, which one. I don't know why I'm even looking at this one. This one has nothing. Next one. Next one. Christ, why is there nothing here? Ooh. Mitigated by that. Now, actually, I'm going to give you another question, actually. So, when you're in this situation, you're probably struggling. Which order block do you pick? Okay, so remember, all you have to do is look for the extreme. So you find the extreme points. This is a good example. Yeah, it is. So we've got the high that's here. Why is that pink? That's fine. We've got the high that's here and the low is here, right? This low was broken down here. What caused this break was this order block that's sitting here. That order block has already been mitigated. So price has no reason to come anywhere above here, right? Why? Because that's already been mitigated. It has got no reason to even go there. Where does price have to come to next? Where's the next? We create this low. Price broke this low here. So we had a low break and then that OB was there. That's already been mitigated. So, you're sort of questioning, it's not clear, but I wouldn't use this one purely because it's not inside our POI. Now, is there an easier way to... There we go. Actually, that's pretty simple. Okay, but then let's go down the time frames and see what's happening again. So again, you just simply ask your question. What needs to be mitigated and what doesn't. So okay, high, low, broken, mitigated, broken, mitigated, broken, mitigated, broken, mitigated, broken. Oh, mitigated. Okay, next one. Next time frame, same thing. You got the low, broken, mitigated, broken. Violated, actually no, mitigated I'll say, then broken, mitigated, again broken. Does that? Yeah, it's already been mitigated, to be fair. Then we broke again, mitigated, then we broke again, mitigated, we broke again. If we refine this order block to this one, have we been mitigated? No, we haven't. Okay, I don't know why I paused on that one. We haven't. As you can tell, I don't actually plan the videos, so I'm just making this up on the spot. But this one hasn't been mitigated. I don't even know if it reacts here, but we've got order block here. Okay, there we go. Okay, so what does this give me? It would give me, if I use the open, it will give me a 3.6. So if say a 4 pip stop loss. Now, at this point, do I need to refine it even more? No. Why? Because 4 pips is more than enough for me. So what I'm going to do is, now that I've found where I want to place the trade from, let me go back to here. So now I've found that. All I need to do is place my entry point here. My stop loss is going to be 4 pips. So let's put that. Bloody hell, mate. Let me go 4 pips. Boom. And where is the TP going to be? That structural low that was formed. You probably can aim for that one if you want. But look at that. 29R. Does it trigger? I don't even know. I hope it does trigger for the sake of this video. Okay. Oh, perfect trigger. Perfect trigger. Perfect TP. Simple. Right. Now, can we over refine it? We probably could. So it's triggered there, right? So where were we? We were on the 2 minute for that one. Let me mark this OB out so I know exactly where I am in this situation. Oh, why have I done that? Sorry. Your order block is there. Let's do there. We were on the 2 minute. Let's go to the 1 minute. Okay, same thing. Ask yourself the questions. Low, that's not even been broken. Then it gets broken by this one, mitigated. Then this low was broken here, mitigated. This low was broken there, mitigated. That low was broken by this one, mitigated. Again, this low was broken here, mitigated, perfect. Okay, and then we had this one didn't do anything. Then we had this, that one's been violated, and then we created this low. That low was broken by up here. Okay, here we go. So we've got this order block here on the 1 minute, and then if we were to refine it, we refine it to this one, right? But the trade triggered here. So if you're going to over refine a trade, this is the risk that you have of doing. So although you're going for a better risk to reward, you could have got a 2 pip stop on this one. You would have missed the trade by being too greedy. Now, there's nothing wrong with trying to look for the best risk to reward, but bear in mind, you want a safe trade and you want a comfortable trade to place. Now, I don't personally trade like this. This is what we call a risk entry. I personally don't trade like this anyway. So I would have waited for price to actually get there before looking to actually enter, then wait for our 2 rule process to actually enter the trade. So I would have entered somewhere, probably, I don't even know. I'm not going to show it in this video, obviously, but I probably would have entered somewhere. I probably would have entered somewhere in there, after it's actually tapped. That's the benefit from using our strategy. We can confirm which order block to use, but obviously if you're using the free strategy and using the risk entry method and not waiting for the shift in structure, then you basically risk missing out on the trade if you try to over refine. So the main purpose of this video is, why has that gone to 3 pips? I don't know. I didn't do that. Or did I? Okay, no. There we go. I did not mean to do that. So the main thing I'm trying to say is, don't be greedy. Place the trade if you're happy with the risk to reward. I would have placed this one at 4 pips if I took the trade this way. If I took the trade in this risk entry method, I would have taken the trade here. But for me, obviously, I wouldn't do that. But if that's the case, I would have taken the trade exactly like that, purely because the risk to reward was fine and I was happy with it. So essentially, go through the time frames and talk to yourself. Where does it need to be mitigated? What hasn't been mitigated? Essentially, that's what you do here. Because, for example, like here, for example, we had an impulse. Did it break structure? No. The break structure happened from somewhere here, right? That's not been mitigated. It got mitigated here. Then we had another break of structure. This order block, has that been mitigated? Yeah, it got mitigated here. Then we had another break. Price has no reason to go anywhere up here. I realize I am speaking incredibly fast, and I don't know why. So I do apologize. But nothing up here needs to be mitigated because that's already been done. It's already been clear. So in theory, price doesn't need to go up here. Okay, so think about it that way. Doesn't matter what time frame you're looking at, but that's essentially what you have to do in terms of talking to yourself to find the right POI. But I'm not going to waffle on anymore, and I hope that you found this video useful in what to do when you have how much to refine. It is down to a personal preference, which is why I say backtesting is your best friend, because to find what you're comfortable with and what you're comfortable losing or what you're comfortable missing and what risk to reward you're comfortable with, it will come with backtesting. You can't copy me. Because why? Because I'm not saying I'm better than you, by the way, and I hope that you guys become better traders than me. But I'm just trying to say is, you need to find who you are as a person. You need to find who you are as a trader. So backtesting is where you'll find your answers for that. But for now, I'll leave you guys be. Again, if you want to join Vertex, feel free to join the trade membership or join our bootcamp this month. If you want to find out more, visit our website at vertexinvesting.co.uk. or simply email us, message us on Instagram, whatever you feel. Again, keep up the messages that you send us regarding your trades that you've taken using the free strategy. It just gives us more content to share for the YouTube community for free, and hopefully help more traders in the YouTube community, and learn this skill set, that can pretty much change your life, right? Sounds a bit dramatic, but it's true. This one skill, if you master it, put the effort in, it can change your life. Just bear that in mind. But I'm not going to talk too much about psychology just yet. I'll save that for another video. But I hope that you all remain safe, and I hope that you obviously, take a moment away from the chart sometimes. Appreciate your time. Appreciate your time with your loved ones. Because these are, that's the time that's, important to you. It's not all about money. It's not all about trading. Make sure you remember the real world at times. But I'm not going to go too far into that anymore. But take care of yourself, and I'll see you guys in the next video.